Hi guys, this is SJ at Champion Trader HQ and welcome to episode 105 of my Making Forex Great Again weekly video update. And this is for week ending Friday, January the 28th, 2022. As always, if you want to connect or you want to chat or if you have any questions, you'll find all my contact details below this video so we can connect via Telegram, Skype, Instagram or via Facebook Messenger. And just before I get started, this is just a quick reminder to let you know that we have videos covering all the latest results and stats for our featured $2,000 account. That's the one in the main website, and also from the $20,000 real money account, otherwise known as the $1 Million Challenge account. And this is where the Money EA, the trading robot, is currently attempting to turn a real money $20,000 account with IC markets into $1 million over the next 12 months. That's from November last year, November 2021 through to November this year. So you're welcome to go and check out the other videos in our channel. The links to the playlists are in the description too, and you'll be able to see how well both accounts are currently doing. And just very quickly, as it is the end of January, the end of the month, with the $1 Million Challenge account, and after just 60 days of trading, the net profit to date is $9,111, which equates to $152 per day. That works out at $759 per week so far, or just under $3,200 per month. And of course that will gradually increase as the trading progresses with the way that the EA is set up and the way that it rolls. And there's also a following those figures, a banked return, a net return on capital deployed of just over 45%. So 45% is the current net profit, net return. And if you calculate those numbers with regards to working a regular 9-to-5 job, for example, the hourly rate, or should I say the profit that the robot is generating from this trading account, that comes in at just under $22 per hour. So it's still early days, but 45% after 60 days, well, you know, that's not too shabby. It's well on track towards its target, and overall the account is doing really great. So in today's video, and based on questions that I have recently received from interested prospects, I'm going to cover and I'm going to go over the following subjects. Okay, so I'm going to explain what a PIP is in Forex. I'm going to explain how different PIP values are calculated in Forex trading. I'm going to tell you what 10 pips is actually worth, what 10 pips is actually worth in monetary terms. Plus I'll explain and I'll give you some examples of micro, mini and standard lots in Forex trading. And last but not least, I'm going to tell you the strange but true tale of the Big Mac, the large fries and the Lambo, and how they tie everything together. So you know, be sure to stay tuned for all that. Okay. And by the way, before I forget, if you want a quick overview of the Forex market, you want to know how it all works, why the market moves up and down, what makes it move up and down, how trading manually compares to trading with a robot. You also want to know how the Money EA, the actual trading robot, trades and how it works, and for the full lowdown on our 30-day risk-free trial, and how you can be up and running trading and, more importantly, be making money with the Money EA, the Forex robot, within the next 24 hours. Be sure to check out all the previous videos in this particular series, and you'll find all the answers to those questions. Hopefully you'll find all the answers to those questions in there. And like I just mentioned, the link to the playlist, you'll find that in the video description below. So let's get started. So the question is, can you explain pips and pip values in Forex trading? Well, that's another great question. So I'm going to base the answer to this question and the explanation on the GBP USD currency pair, as this is the specific pair that the Money EA, the trading robot, is the only pair that the robot trades. Okay, so to start with, a pip, which stands for percentage in points or price interest point, a pip in Forex, it's typically used to measure and to display the price movement in a currency exchange rate. For example, at one point last Friday, the GBP USD exchange rate was at 1.33650. Okay, there you go, 1.33650. This is from last Friday. Now, as I covered in my last video, all this means is that 1 GBP, or 1 Great British Pound if you like, it will buy you just over $1.33, or conversely, you will need just over $1.33 to buy yourself 1 Great British Pound. And if you want to know all the relative ins and outs of why the market and why the exchange rate moves up and down all the time, and what makes it move up and down, together with a bunch of other examples and a bunch of screenshots, be sure to check out my last video, which is episode 104. Okay, because everything is covered in great detail in there. Needless to say, of course, you don't need to know all this info, nor do you need to understand the myriad of different factors in play when trading Forex, and that's because the trading robot, it already has all of this covered. It has it all in hand, and it trades for you on 100% hands-free autopilot. So I'm only really covering this pip question today due to having so many people asking me to explain it in simple terms, okay, which I always try to do. So I just wanted to clear that particular point up before I went any further. So getting back to where we were, and in today's video, which I'm still attempting to get around to, we're going to look at how pips come into play with regard to measuring the price movement or the price difference of the GBP USD currency pair. So let's look at these two prices to start with. There you go, 1.33650 and on the left, and 1.33750 on the right there. So first of all, and because the last of the 5 digits, so the fifth digit there, because it measures tenths of a pip, because it measures tenths of a pip, we're gonna, in this example, we're just gonna ignore it. We're gonna get rid of it. So now we've got these two numbers with the fifth digit gone. We've got these two numbers, 1.3365 and next to it 1.3375. okay, now we're going to measure the difference in pips between these two numbers. So if we take the last two numbers, we're looking at 65 to 75, and there's a difference there of 10, okay, or 10 pips to be exact, and that could signify a 10 pip drop, or it could signify a 10 pip increase. But either way, just to clarify, the gap here in this example on your screen, the gap is 10 pips. Now I'm sure you've already got this, it ain't difficult, but let's look at a couple of other examples while we're on a roll, just to make sure. Okay, so here we go, 1.3325 against 1.3395. You have a difference there between the two numbers of 70 pips. Okay, next, 1.3375 to 1.3350. There you have a difference of 25 pips. And finally, 1.3280 to 1.3340, slightly different numbers, but there you have a gap of 60 pips. That's the difference between 280 and 340 in this last example. So hopefully and after all that, you'll now be able to look at two prices and calculate the gap, or should I say calculate the gap in pips between both numbers, either in your head, or if you want you can always use a calculator like most people do. Just remember to lose the last of the 5 digits, okay? We don't bother with the 5th digit. Now that's all well and good, as you can now calculate the difference in pips between two numbers. So the obvious next question after that is, and if we go back to an earlier example, there you go, you've got 10 pips there in this example, the difference between the two numbers, 65 and 75. So the next question would now be, the obvious question would be, what is 10 pips actually worth? What is 10 pips actually worth in monetary terms? That's what everything comes down to, okay? Now, it's a really good question, but before I answer it, I'm just going to turn the tables and ask you this question real quick. So, with a winning trade of just 10 pips, the one we just looked at, which is quite a small movement on your MT4 trading chart, okay, but with that winning trade of just 10 pips, which of the following two items do you think you will be able to buy with the 10 pip profit that you just made? Okay, so you just made 10 pips profit. Would you be able to buy a Big Mac with large fries and a Coke, sugar free I believe, for the difference it makes? Would you be able to buy a Big Mac with large fries and a Coke, or would you be able to buy this rather old yet still rather pucker looking 2004 Lambo Gallardo? Okay, so which do you think you will be able to buy? Which of those two do you think you'll be able to buy with the 10 pip profit that you just made in this example? Now, the answer might surprise you, and the results in a live kind of seminar environment, you know, where people can put their hands up and vote and whatnot, the result is typically split 90-10, typically split 90-10 in favor of the Big Mac and fries. So 90% of people go for the Big Mac answer, and that's kind of understandable to a degree. But the thing is, with the 10 pip profit that you just made on that example winning trade, you wouldn't actually need to choose between the two, because you would be able to buy both. Yeah, you'll be able to buy both the Big Mac and the Lambo with your 10 pips worth of profit there. So I guess you could kind of stuff the Big Mac and fries in your trap while you were driving back home in your Lambo, if you felt like doing that, and why not? So look, after that you might think I'm talking bullshit, which I do from time to time. In fact, some people will go as far to say that I talk bullshit all the time, but not in this case, so to hell with them anyway. So look, now I'm going to show you why the small 10 pips worth of profit, I'm going to show you why it really could generate you enough money to buy both the Big Mac and the Lambo, as in my previous example there. So let's take a look at that next, okay? So to kick things off, let's go back to this graphic again with the 10 pips profit example. There we go. 65 to 75, the 10 pips profit. So the actual monetary value of those 10 pips is entirely 100% dependent upon the actual size of the trade that you place, or should I say it's dependent upon the actual lot size of the trade that you place. So let's now look at the different lot sizes that you could place. So 0.01 lots. These are called micro lots, and with this size trade, each 1 pip move is worth just 10 cents. Okay, next up, 0.1 lots. These are called mini lots. 0.1 are called mini lots. And this size, with this size trade, each 1 pip move is now worth $1. And finally, 1 lot. These are called standard lots. Okay, and with this size trade, each 1 pip move is worth $10. And there's a quick summary of the 3 lot types that I just covered. Micro lots, 10 cents a pip. Mini lots, $1 a pip. Standard lots, $10 a pip. Now, you can't fund your account, just to make it crystal clear, you can't fund your account with $300, $400, $500 or so and then start placing multiple standard 1 lot trades. It's just not possible. You just can't do that. That's due to your account balance plus leverage, margin requirements and such like. But it's not something that I'm going to cover. I'm not going to cover all those subjects right here and now in this video, you know, leverage, margin and such like, but I will cover them in a future video. Okay, so now, and going back to the infamous 10 pips worth of profit, let's look at how much you would have made based on the respective lot size of your winning trade. Okay, so as you can see on your screen there, a 0.01 lot trade, that would generate you a profit of $1. That's 10 pips multiplied by 10 cents per pip equals $1. A 0.1 lot trade, that would generate you a profit of $10. 10 pips multiplied by $1 per pip. 10 pips multiplied by $1 is $10, of course. The next one up, that is a 1 lot trade, a standard lot trade. That would generate you a profit of $100 because 10 pips multiplied by $10 per pip is $100. And a 10 lot trade, that would generate you a profit of $1,000. That is 10 pips multiplied by $100 per pip. 10 pip multiplied by $100 per pip is $1,000 profit. And this is one final really big example. A 1,000 lot trade, that would generate you a profit of $100,000. That's because 10 pips multiplied by $10,000 per pip. Okay, 10 multiplied by 10,000, that is 100,000. And even with that last example of the 1,000 lot trade, each lot you trade is still worth $10 per pip. Okay, each lot that you trade, it's still worth $10 per pip, but you're trading 1,000 lots in this example. So each 1 pip move is worth $10 multiplied by 1,000, which is 10,000. Okay, so 10,000 pips, sorry, 10 pips multiplied by $10,000 per pip is 100 grand, $100,000. Needless to say, you'd need to be, you'd need to be a big bank or a big hedge fund in order to have a sufficient high 6 or 7 figure trading balance to even place a 1,000 lot trade, because it is, humongous. But that's what would be made, that's a profit that would be made trading at that particular level. And of course, on the flip side of that, should you place a losing trade instead, then you'd also lose $100,000 in that example. So it does work both ways, of course. Now, based on all of that which I just covered, that explains how the very same 10 pip winning trade would generate you enough profit to buy both the Big Mac and fries and the Lambo. Why? Well, that's because a 0.1 lot trade would generate you a profit of $10, more than enough for the Big Mac and fries, while the 1,000 lot trade would generate you a profit of $100,000, so you could go out and buy the Lambo Gallardo. Both of which have been generated, don't forget, from the exact same 10 pip winning trade. Okay, it's the same trade, the same 10 pip winning trade that's enabled you to generate enough money to buy the Big Mac or the Lambo. This is an important point, which is why I've repeated myself 3 times already. So just like I said a little earlier, and to answer the secondary question that cropped up back there, the actual monetary value of those 10 pips is entirely 100% dependent upon the actual lot size of the trade that you place. And just as a quick side note, the pip values that I've used in this video, in the explanation, they relate to the GBP USD currency pair only. That is to say that with some other currency pairs, also I believe with gold and silver, the actual value of 1 pip will vary. So I've not gone into detail on all of that stuff. I've just stuck with the pip value of GBP USD. And also, as I mentioned a few minutes back, I'll be covering the subject of account balances, leverage, spread and margin requirements. I'll be covering all that in a future video. So just as a final quick reminder, I've covered in this video everything to do with pips, pip values and lot sizes. But if you want further details on the reasons how and why the market, the Forex market, moves up and down, what makes it move up and down, how the EA, the trading robot, how it actually trades and how it works. You want to know how trading manually compares to trading with a robot. Plus, you want the full lowdown on our 30-day risk-free trial and how you can be up and running, trading and make your money with the robot within the next 24 hours, and a bunch of other stuff to boot. Be sure to check out all my other videos, and you'll find the link to the playlist for all those videos in the description below. So hopefully that answers the initial question and the secondary question there regarding pips, pip values, lots and lot sizes, and hopefully it also explains how the exact same winning 10 pip trade can make you enough money to buy yourself a Big Mac and a Lambo. Okay then guys, that just about wraps up today's episode of my Making Forex Great Again weekly update video. I still have a bunch of stuff to cover, plus more questions I'm going to be answering that were sent in by interested prospects. I always have plenty of those, and that's great, and a bunch of other stuff to boot. So look, don't forget to hit the subscribe button and the notification bell too, and then you'll be notified when the next video gets uploaded. Okay, so this is SJ here at Champion Trader HQ, signing off for today. Thanks again for taking time out to watch this video, and don't forget to check out our main website over at themoneyea.com. Then, if you haven't already, you can start the risk-free 30-day trial, and you can be trading within the next 24 hours. And all the links are in the description below this video, together with my Telegram, Skype, Instagram and Facebook contact details. So I will see you again in the next video. Bye for now.